When a customer wants to purchase solar, often coming out of pocket for the cash is not an option. Up until a few years ago, most solar lenders didn't offer a product that made a ton of sense for people. Recently, however, things have begun to change for the better. When evaluating a solar loan with a customer, there are 3 things that we adhere to that we believe make the loan a viable option. First, we want to find the best interest rate on the market. It's no different than any other loan, really. As of the production date of this video, the prime rate for a conventional home mortgage is 3.99%. Anytime you can find a rate the same or less than that, you have a pretty bankable product. Currently, we have loans with rates as low as 2.99%. That's pretty darn low. Second, we want to find terms that make the most sense. Usually that means variety, so that customers can choose the loan that fits their lifestyle best. Currently, we have terms of 5, 10, 12, 15, 20, and even 25 years. Third, we want to achieve what is called grid parity. Essentially, that means that we want the monthly loan payment for your solar to be at about the same as your utility bill, so we don't interrupt the customer's current lifestyle. So if a customer currently has an electric bill of $150 a month, we want to find a loan that's $150 a month or less, with the shortest term and the lowest interest rate possible. Let me explain it in a different way that might make more sense. If your electric company came to you and said, "Hey, we're going to take your current average bill, lock it in place for the next 10 to 12 years, we will never raise the rate that whole time, and after 10 to 12 years, we'll stop charging you for power, but we'll still give you your power." Now, if they said that to you, would you do that deal? Yeah, I thought so. You probably wonder how you got so lucky. Look, that's solar now. So how's that possible? Well, let's pull back the curtain and show you. The federal government still gives a 26% tax credit for your purchase of solar. So the banks have come up with a pretty interesting loan model to help customers take advantage of that and get solar now without having to bankroll it on their own. The solar loan lends on 74% of the loan value and waits about 18 months for you to transfer that tax credit the government gives you back into the loan. This way, your monthly payments reflect the price as if you only got a loan for 26% off the price the entire time. Let's do an example so it's more clear. Let's say your solar system costs $20,000. Your federal tax credit, actually called the ITC, would be 26% of that, or $5,200. Your solar loan will lend on the difference, or $14,800, and give you a period of roughly 18 months to file your taxes, get your tax credit, and then transfer that money into the loan. This keeps your payments the same for the duration of the term. Now that fixed payment starts becoming an asset for you, instead of the never-ending liability that your current electric bill is. But what if you don't transfer the tax credit money, but instead use it for something else? How will that affect your loan payments? After the 18-month period, your loan will re-amortize for the full 100% value of the loan, and your payments will reflect that amount now. In our example, now you'll be paying the full $20,000 loan instead of the $14,800, and your interest rate stays the same. One way to look at this is that 2.99% interest rate on a loan is certainly cheaper than your credit cards. What you do with that tax credit is entirely up to you. What if you want to pay off that loan early? Will you be penalized? Nope. Knock yourself out. Pay that off as soon as you want. With nothing out of pocket, no lien on your home, and all the tax credits and benefits going to you, ownership is hard to beat.